Understanding upgrade loans. The pitfalls. You need to know, in recent years, there's been a significant shift in how people finance their purchases. Whether it's to consolidate debt, fund a large purchase, or cover unexpected expenses, more folks are turning to personal loans. One option that has gained traction is the upgrade loan, which touts itself as an alternative for managing finances. But before you dive in, let's take a closer look at the potential pitfalls of upgrade loans and what they could mean for your financial future. What is an upgrade loan? First, let's get the basics out of the way. Upgrade is a financial technology company that offers personal loans and credit monitoring services. Their loans are primarily aimed at consumers looking to consolidate debt or finance larger purchases. Upgrade allows borrowers to access loans with relatively high amounts and flexible terms, often up to $50,000 with repayment terms from 36 to 60 months. Sounds convenient, right? But as with anything that sounds too good to be true, there are downsides to consider. 1. Interest rates can be steep. One of the biggest concerns with upgrade loans is the interest rate. While they often advertise lower rates than credit cards, the APR for an upgrade loan can range anywhere from 7.99% to 35.89%. Depending on your creditworthiness, it's easy to fall into the higher end of that spectrum. Remember, an interest rate near 36% can effectively double the amount you pay for your loan if you're not careful. Why does this matter? If you take out a loan at 25% APR to cover a $10,000 purchase, you may end up paying $15,000 or more back over the life of the loan. That's a significant impact on your budget and financial health. 2. Loan fees and hidden costs. It's essential to dig deeper than just the interest rate when evaluating an upgrade loan. Hidden fees can sneak up on you, leading to larger debt than you initially anticipated. Upgrade charges an origination fee that can range from 1% to 8% of the loan amount, up front. This fee is deducted from your loan before you even receive it. So if you borrow $10,000 with a 5% origination fee, you'll only get $9,500 deposited into your account. Also, be on the lookout for late payment fees, which can add up quickly if you miss a due date. These hidden costs can make an upgrade loan more expensive over time, turning your financial plan into a quagmire of unexpected charges. 3. Potential impact on credit score. When you apply for an upgrade loan, they conduct a hard inquiry on your credit report to assess your credit worthiness. This can temporarily lower your credit score, typically by a few points. If you are already on shaky ground with your credit, this dip can feel particularly damaging. Sure, if you use the loan to consolidate debt and improve your score over time, it could be a net positive in the long run. But if your plans go awry, or if you make late payments, your score might take an even bigger hit, as will your ability to secure the best interest rates in the future. 4. Payment default risk. Let's talk about the elephant in the room. What happens if you can't make your payments? Upgrade will report late payments to the credit bureaus, which can further damage your already fragile credit score. If you miss several payments, it can trigger a refusal to issue future loans and ultimately lead to collections or legal action. Worse, Upgrade does not offer the same protections as other debt relief options like credit counseling or formal debt settlement, which can help you negotiate lower rates or more manageable payments if you find yourself in over your head. 5. Temptation to overborrow. One of the trickiest traps of personal loans like Upgrade is the temptation to borrow more than you need. The promise of quick cash can lure you into believing you can finance that vacation or upgrade your tech gadgets without long-term repercussions. Because Upgrade offers flexible loan amounts, it's easy to overlook your actual budget. If you borrow $20,000 thinking you can easily pay it back, but life throws you a curveball, like medical bills or a job loss, you could quickly find yourself overwhelmed. A side note: if you're considering taking out a loan, actively assess your financial landscape first. Ask yourself, will this loan help me grow financially, or is it just a stopgap measure? 6. Rigid repayment plans. Unlike some other lending platforms that allow for flexible payments, Upgrade's repayment terms are quite rigid. You have a specific monthly payment due date, and failing to meet it can lead to penalties. This rigidity can be a double-edged sword. On one hand, having a set monthly payment helps you plan your budget. On the other hand, life is unpredictable, and if unexpected expenses arise, You may have difficulty keeping up with your upgrade loan payments. 7. Not a long-term solution. While an upgrade loan might feel like a quick fix for a pressing financial need, it's essential to remember that it's not a long-term solution. Borrowing can be an easy way to alleviate financial stress temporarily, but it doesn't address the underlying issues that lead to that stress in the first place. Consider why you are taking out this loan. Are you dealing with chronic overspending? Are you not fully aware of your budget? These deeper issues need to be tackled through sustainable habits like creating a budget, building an emergency fund, or seeking professional financial guidance. 8. Limited customer support. Many consumers have reported dissatisfaction with Upgrade's customer service. While experiences can vary, going through the loan process should not feel like pulling teeth. Having to wait long periods for responses regarding your account or not getting adequate help with payment issues can exacerbate an already stressful financial situation. When you're navigating potentially dangerous waters like loan repayment, having a supportive customer service experience can make all the difference in your peace of mind. Conclusion: think before you leap. While upgrade loans offer certain conveniences, they come with significant risks and costs that could derail your financial future if you're not careful. As with all forms of borrowing, it's crucial to assess your unique situation before diving in head first. Ask yourself, can I afford the monthly payments? Am I borrowing only what I need? Do I have a plan to pay this back, and how will it affect my overall budget? The path to financial health doesn't lie in chasing quick fixes, but rather in developing sustainable habits that allow you to manage your money responsibly. With careful consideration, you can avoid the pitfalls of upgrade loans and find better alternatives that serve your goals rather than hinder them. An alternative approach. Instead of heading to the loan aisle, consider ways to manage your finances that don't involve taking on more debt. Building an emergency fund, living within your means, and seeking opportunities for side gigs or part-time work can relieve stress in a sustainable way. In the end, financial freedom comes from knowing the difference between what you want and what you truly need. Take the time to evaluate your options and craft a plan that allows you to thrive without falling into the traps of debt. Your future self will thank you.